welcome to today's Gramersi MASTERcast event. This is in association with the retail investment firm True, and the topic of the event is called How to Raise Investment. Just want to say thanks for attending. It's going to be really cool. Been looking forward to this, so let's get started. I know that most people know who I am by now, but just in case you don't, my name is George Taylor. I am the founder of Gramersi.com. We are a digital publisher / online magazine for retail startups. We also do video content as well as events like this. We do have some pretty ambitious event plans in the future, but of course we're quite limited to that right now due to COVID. So we're having to keep everything digital and remote. A bit of a shame, as I know that the one thing everyone needs more than anything else right now is face-to-face communication, but it is what it is. We'll get there. So going to just really quickly skirt through some highlights, but before I do that, I just want to say a massive thank you to all the brands and everyone that has supported us in whatever way that is, whether that's following us on social media, whether it's retweeting our articles, or just being simply a reader. We certainly would not be where we are today without you. So I just want to say thank you. I'm very grateful. I'm going to give you some super quick highlights, as I always do. Won't take too long. Lord Sugar retweeted us again. Fantastic. Very happy about that. I'm a massive Apprentice fan, so it's always nice to be recognised by one of your business heroes. We also have worked with some awesome entrepreneurs in the last couple of months. So Tim Campbell, MBE, he's recently launched the first ever life after death tech platform. Crazy stuff. Never heard anything like it, but it's really exciting. Melanie Blake, who's self-made millionaire, also author. Her books, I think, at the moment, top 10 Amazon bestsellers at the moment, something like that. Don't quote me specifically on that, but I know it's something within that region. We also have a couple more apprentice candidates. One was a winner, Sarah Lynn from Sweets in the City, and very recently Pamela Laird from her beauty startup, who, although she got booted out, I think third from last, she then went on and successfully secured investment on Dragon's Den Island, and that's with her brand Moxie Love. So lots of great stuff coming in. Just hugely grateful to do what we do. We're also going for a pretty large pivotal shift on our YouTube channel right now. That will be like relaunching in the next 3 to 4 weeks. Just to give you some quick context, we've got some amazing videos lined up from the Vegan Society, talking about the rise in vegan entrepreneurship. Seed RS doing some crowdfunding 101 videos for us. Club Soda, they are a no to low alcohol society body, official body, what are you going to call it? And also we've actually got some videos from True, which is very cool. Very, very cool indeed. So every month since we started, we've jumped up by 20% a month. That's been a pretty consistent number. I mean, give or take 1 or 2% either way, up or down. This month, once again, we're on track to do our biggest month. We've already topped last month's traffic, and we're only 3 weeks in, so I think we're going to do it. Again, wouldn't be possible without everyone reading our articles, sharing our posts, following us on social media, sending us their press releases. So thank you very much for your support. I thought I'd put this last one in there because Emily's in the house. So we recently covered Danny Gray from War Paint's brand new makeup manual for men. Super, super exciting stuff. Very innovative, a little bit controversial if you ask me, and brave. But True do invest in War Paint, so that's why I thought I'd throw that one in there. Just a little success story, not only from our side but also from True's side as well. So just want to put out a quick call to arms. I know that most of you have already, but if you haven't followed us on social media, we'd really appreciate if you could do. The more followers we get, the more clicks we get. The more clicks we get, the more our brand articles get exposure, and that is only a good thing for the brands that we work with. And obviously, we're all about supporting startups in any way we can, bolstering that side of the economy in any way we can. So every little helps, as they say. And if you do want to reach out to us and send us a press release, our email address is here at the bottom, info@gramersi.com. We'd be very, very grateful. I'm not going to hang on for any longer. Let's get straight down to why you were here. So today as a guest, we've got Emily Bullman, who is an investment associate at True, who are Europe's leading retail investment company. And so if you just want to just hang in there, what I'm going to do is I'm just going to unshare my screen and switch over to Emily. She'll take over from here. So just give me a couple of minutes to sort that out for you.
Okay, great. So yeah, hi everybody. I'm Emily, and thanks for having me today. I've worked in the investment arena for about 5 years now, starting out on a graduate scheme for HSBC through to the early stage investing that I do today at True. I always wanted to work in the early stage space. I'm really passionate about supporting small businesses to strategize and grow. I mean, I think my job is pretty cool. I get to meet so many amazing founders with innovative concepts, from flushable sanitary towels through to sustainable dog food and everything in between. And I totally get that the word investment and approaching investment can be daunting. As founders, you're typically right in the detail, the product, the customer, the experience, and thinking about investment can be a little alien. Your company is your baby, and you want to make sure you're making the right decision. In this short presentation, I want to help bridge the gap about investment, bust some of the most common myths, and then tell you a little more about us. So, in order to get to the how, we need to first ask the what, who, where, and when. Let's break it down. What? Some of the main initial questions are usually around what types of investment there are available and what does it actually mean to me and my business. Investing is essentially taking on external capital to support growth. There are a few main sources of investment. Firstly, angel investment, taking capital from sole founders or individuals. Number two, institutional investment, capital from professional funds. And finally, crowdfunding. Depending on what stage your business is at, each of these have different benefits. There are also other types of capital you can tap into that won't dilute you. For example, revenue-based loans from providers such as Wayflyer and Uncapped. Remember, when you're taking an investment, you're selling part of your business. You're bringing in shareholders who, to a varying extent, will expect certain things. You need to make sure you're ready and prepared for this, and that you want to give away some of the pie, which leads us nicely to who. If you've decided investment is right for you, the next questions are who provides investment and who is right for me. As I mentioned, there are three key types of investment, and the benefits of each will depend on where you're at in your journey. For very early stage businesses, angel investing is often the best way to go. They can offer more than just capital, they lend experience, guidance, and advice as well. Crowdfunding can be great to help build a community and get buy-in from your customers. They'll typically be more loyal if they feel that they own part of the brand, and we've seen great success from brands in our network who have tapped into this source of capital. VC or institutional investors often want to partner with you to help supercharge growth. Institutional funding can come from generalist or specialist funds. We're the latter, and it's often something you want to have a good think about beforehand. Some VCs will set specific goals and objectives that don't suit everyone. Of course, VCs can also offer more than just capital. They can support you in opening doors and using their experience with other firms to help build out your own business. My best advice on who to approach is to look at VC portfolios to see stage and sector fit. Try and work out what type of investor they are. Are they hands-on, hands-off? Do they want board seats, etc.? Do your research and always choose someone who will be a good cultural fit. Know what type of funding is right for your stage of business as well. For example, an engaged angel investor can be as good as any VC and a great partner to offer hands-on advice to grow your business. When? Well, this has already been partially covered, but judging when to raise can also be critical. For consumer propositions especially, you typically need to be able to demonstrate product market fit and initial traction. I'll cover off where we stand on this later on as True, but judging when the right time to raise will help to guide your decision on who is best to get in contact with. And remember, fundraising can take a while. It's a really intense process, so make sure you leave enough time to manage it properly. And then where? So where do you start? Where do you go to find investors? Unfortunately, there is no single point of truth on this one, so doing your research will be essential. But some of my top tips include: firstly, using online resources such as AngelList and Crunchbase to see who is active in your particular area. If you're looking for an angel, I always recommend for founders to look at some of the aspirational brands in your sector and see who their early supporters were. Secondly, keep up with the press to see which funds are active and attend events such as this one to meet investors. Thirdly, tap up portfolio companies of VC investors. Get their view of an investor and see if they would be willing to make an introduction or a recommendation. Get on LinkedIn and hit us up. We keep regular tabs on our inboxes and are usually happy to take a call. And finally, funds are increasingly democratizing access to capital. So make sure you check to see if funds offer a get in touch option on their website like we do. Hopefully that helps to answer some of your questions around how to raise investment, but there are so many myths out there about fundraising, I wanted to bust some of them. So one of the first ones we often get is, if a VC turns you down for investment, there must be something wrong with your business. Absolutely not. Some investors just aren't right for you. I'll often turn down a business due to sector, stage, etc. that will be picked up by another investor and do really well, and vice versa. I really encourage you to approach investing a bit like dating. Do your research, find the ideal partners for your stage, check size and cultural fit first before reaching out. And remember, you might not be right for a VC right now, but you might in the future. Always ask if you can add an investor to your quarterly updates, and you never know, it might lead to something. We often speak to companies for up to 18 months before we invest. VC investing is only for those with connections. Again, absolutely not. Funds are increasingly democratizing access to funding by offering companies an opportunity to apply through their websites. I'm always happy to receive LinkedIn messages too. Again, I would encourage you to do your research first. There's nothing more annoying than getting approaches from companies that are completely outside scope just because they haven't researched you. Sole founders don't get funded. Absolutely not. If you're a sole founder but have built or in the process of building a strong, trusted team, then you're just as likely to be supported as a 2 or 3 person founding team. If your company doesn't have the potential to get to $1 billion, you won't get funding. Absolutely not. Some of the most successful exits for VCs and entrepreneurs are well below this mark. Reason being, they've managed to grow capitally efficiently. Research your investors. If they have big funds of more than a few $100 million, it's likely that they'll need to see the potential for assets to reach $1 billion valuation, but a lot of VCs don't, including us. I can only build a big business by raising VC funding and won't be credible otherwise. Again, absolutely not. Building a big, successful business is very dependent on your business models and ambition. It's not worth taking funding if your goals aren't aligned with your investors. Can't stress cultural fit enough. And finally, investors are vultures looking to take over your business. Absolutely not. To be completely frank, VCs have too much going on with too many companies to do that. Even mid-market PE is falling out of love with this strategy. You should look at VCs as partners. We want to help support growth, and being involved is great to help facilitate this, but ultimately we're backing you to do it. So that was the scary bit out of the way. Now I can tell you a bit about us. So True is a consumer and retail focused investment fund. And we have kind of 3 main elements of our business. The first of which is an early stage investment fund, which is where I sit. And so I'm investing in one of 2 types of companies. Either consumer brands that have a differentiated proposition at the forefront of changing consumer behaviors. So for example, like George mentioned, our investment into wall paint for men and men's makeup brand. We're invested in a hair dye brand called Bleach London, as well as a sexual wellness brand called Maud out in the States. We also invest in retail technology companies that help to power those brands. And that can be anything from marketplaces through to B2B SaaS. For us, we usually look for businesses to be generating sort of at least 40K of monthly revenues before we invest. And the reason for that being, we aren't so much a firm that helps to set up the businesses, we're there to help scale. In addition to our early stage fund, we have a PE fund. They are investing up to 40 million in more scaled up operations and into some consumer brands. So there's a couple listed on that page of where we've invested previously. And then finally, we have a commercial partnerships team that partners with some of the biggest retailers out there, anyone from sort of John Lewis and Marks and Spencer's in the UK through to 7-Eleven and J&J in the States. And essentially, we're kind of a consultancy partner. We provide access to innovation. to help them kind of improve their business models. So that's normally on a tech front, but we can introduce our brands as well. In terms of, you know, what am I looking for in an actual business to invest in? I'm kind of ambivalent about the end market sector, etc. I'm looking for founders that have drive, ambition, that my values are aligned with, and who I generally think are creating businesses that are at the forefront of changing consumer behaviors. But yeah, happy to take any questions. How long does the average deal take? I guess this can really vary depending on how ready kind of you are. You know, it can be done in as quick as sort of 3 weeks through to taking a really quite a long time. The best way to approach it is to start by having most of the information ready and upfront in the beginning. So that normally means pulling together a pitch deck, which is, I don't know, 10 to 20 pages long, going through the key areas of your business. So the best pitch decks that I see have an overview slide at the front that explains the problem that you're trying to solve and the solution that you come up with, what your product actually does, what's the market, who are your main competitors, and how are you different. Then a little bit about traction, maybe something about your financials, and then team, because at this stage of in your life cycle, team is almost the most important thing. And then usually at the back they'll have kind of an overview of the raise, etc. So I would say as long as you've got quite a lot of the data pulled and ready for investors to start asking you questions, it shouldn't take more than a couple of months. You know, once you've gotten through those initial rounds and calls with investors, they normally like to go into a lot of detail. So I would have ready, you know, financial information, customer data, etc. For small businesses that are below the 40k monthly mark, what kind of investment would be best suited? So, I mean, my advice would be to either look for some angels who are active in your area. As a fund, we're a huge believer in finding the right kind of angels as being more important than having historic VC money on your balance sheet. As I mentioned in the presentation, have a look at some aspirational brands in your space and try and approach those angels first. I would also suggest having a look at some of the accelerator programs and incubators that are out there. Anyone from kind of Entrepreneur First through to Techstars, etc., can be really helpful at providing you with not just cash, but access to talent, advice, as well as a whole range of investors on the back end. So quite a few of those programs will include pitch days and sessions a little bit similar to this, and we pick up quite a lot of companies off of the back of those programs. Do you have any idea on how to protect your idea if you haven't yet launched but want to start talking to investors to avoid anyone copying your idea? I mean, if you're super worried about this, you can always put an NDA in place so that when you're sending pitch decks around, etc., you have, you know, comfort that nobody else, that they won't be able to go and speak about it anywhere else. You can get NDA templates off of places like the BVCA website, the British Venture Capital Association. And most investors will be happy to sign into that. You can have like an 18-month time frame in which they will, you know, they can't basically talk about it to other people. I think the other thing is just being cognizant of the fact that, you know, most of our conversations are done in private, and, you know, we of course wouldn't go around sharing information. And make your pitch deck vague. You know, you don't have to give away all of your secrets for that initial conversation. And as you know, if somebody makes noises that they think it's a great idea and that they're very keen, then you can start releasing more information to them.
Liz, do you want to say I've got a template for you if you want it? I mean, we have had people sign NDAs before, and it's a pretty effective template. So,
I've got one I use, you know, for PR clients, but I think it would be a little different. So if you have got one, that would be really helpful. Thank you.
I have, yeah. I'll get on over to you after this office meeting. So we've got 14 minutes, guys. This is a really great opportunity. Not one that will come around very often. So I highly recommend it. If you've got any burning questions, now is the time to get them in the chat, because Emily's here. She's not going to be here for too much longer. So I would say don't miss out on this great opportunity.
I am always happy to take questions over email if you prefer to ask privately. I'm more impressed I haven't had any of my four-legged friends kind of get in the frame yet. What are the expectations from a VC regarding monthly quarterly management reports, raising larger funds? Cool. So I think in that most recent question in the chat, it does sort of vary depending on how big the business is. Where we invest one of our larger checks of kind of 500k up to $1 million, we would expect a monthly board report that would go through kind of key KPIs, monthly trading, expectations of where you're going to be in the next month, maybe an overview of kind of team, HR, and supply chain if that's relevant to you, as well as any other business. We would expect there to be a monthly board meeting of maybe sort of 2 hours long. And look, the main reason for that is genuinely so that we can add value, especially for True. We only invest where we think we can add value to you. We're not just capital providers. So I would look at it less from a, oh, damn it, they just want loads of information from me and this is annoying, and more from a, what can I give them that will be helpful for me to get some advice on the back of. And also, look, if it's just you in the business, I would definitely be thinking about, is there capabilities externally that I can outsource some of the reporting to help kind of ease the burden of it.
Yeah, there was also a bit in there, Emily, about Emma being the only person in the company. Is that something that, I know you've already mentioned solo founders, but do you preferably look for companies that are looking at employing people on a payroll, or if they're taking them on as contracts and freelancers? Is that something that would put your nose up? So I think that's kind of what she's going at as well.
So I think if it was just you in the business, my concern would be less about you being the sole founder and more about you just not having the bandwidth to grow. You know, it's kind of funny, we always have this discussion with our portfolio companies about how, you know, one of them's a bedding provider and the founders are still like packing bedding into boxes and sending it out, even though they're generating like over 3 million in revenue. I'm like, it's great that you still want to pack the boxes, but your time and experience is better off elsewhere. It's kind of being ready to take a step away from that kind of more day-to-day stuff and be a little bit more strategic. So the reason that, you know, some VCs are a little bit more hesitant about backing solo founders is purely for that reason. To be honest, I probably would feel a little bit nervous if there wasn't anyone else there that's helping you. But if part of the plan for the investment is to bring on people and you've identified key roles and maybe even people that you want to bring on, then that could help kind of sort that out. Who would be the best person to contact? Just contact me. I'm easy. What revenue for early stage startups would you start investing at? So as I mentioned in the presentation, we normally look for businesses that are generating sort of 40k monthly revenues and above. We are kind of cheeky in that we have a small part of our fund that we designate for earlier stage businesses. And so we actually can invest in pre-revenue concepts or very, very early revenue concepts, where our maximum check size would be between 50 and 100k. We don't publicize this as much purely because it's not our core focus. And we would really only invest where we genuinely believed in the team and the business, and we thought it was like an amazing opportunity. As a fund, we can invest up to 2 million in any one asset. So our aim is always to follow our money. And actually that brings a good point in my head. Like, always have a think about your investor base. Have they got more cash to follow on? Because if you bring an investor who's completely capped out already, then you know you're going to have to go out and find even more investors later on to support you. So have a think about the long-term the longevity of your investor base as well.
I've got a question for you, Emily, actually.
Go for it.
So in terms of fundraising, I mean, do you also look at how long a company's been running for as well? So say for example, we're not making revenue and we're not actually trying to right now, like we don't care about that. All we care about is just building the audience, building the followers, building our readership, working with as many brands as possible, obviously, which is going very well at this point. We at some point will plan on rolling out revenue streams. I mean, it's probably going to be about mid next year, maybe what are we on, 2023 potentially. That's kind of where we feel like we need to be at in terms of size before we can even start really thinking about that. But the thing I will say is that I don't know whether that's a good or a bad thing in terms of us leaving it too long and that putting people off, thinking, well, why have you left it so long to come to us? Or whether you look at that as a good thing and go, oh, I like the fact these guys are hung in there a little bit and they've, you know, built this organically. How would you look at that?
Yeah, so I definitely wouldn't worry me if a business has been going sort of over 12 months before generating any revenues. I think that's pretty usual, to be honest, in more sort of non-ecom focused businesses. And as a fund, we really value community. So if you can genuinely prove kind of community or readership or some of the other key KPIs that haven't naturally led to revenue, but demonstrate an engaged audience base that would be, you know, primed for revenue generation, that would be absolutely fine. You know, of our portfolio, there's at least 4 or 5 businesses that don't generate revenues right now, that are in either pilot phase or still kind of in the earlier community building phase. So I wouldn't worry about that. I mean, if you've got a product business, we wouldn't invest if there was no revenue.
Got you. Thank you very much.
It's more about kind of product market fit, you know.
Yeah, sure. Thanks for that, Emily. Really appreciate it.
I think it can work the other way around as well. Like in some ways, we get a bit nervous if a company has literally been going like a month because they can't demonstrate actual kind of any traction whatsoever. But today we actually do have an investment committee on a business that only started in September. So I think that's probably the quickest that we've seen somebody come and get some investment.
So no black and white ruling, basically. Kind of a little bit. No. Horses for
courses. We're very colourful rules here.
Yeah, too many grey areas. Too many grey areas. I think we're done. So I'm just going to say thank you very much, Emily. I really appreciate your time today. Thank you. I've been wanting to work with you guys for a while, so it's nice to actually say we've done it now. That's brilliant. I hope we can do more. I hope we can do more of these in the future. I mean, you know, I hope we can bring some great startups to your doorstep, and we can do some more similar initiatives down the line. Would love to work with you guys again. Obviously, you're in very similar space to us. So massive thank you to Emily and True. And also just want to say thank you to everyone that has attended today as well. And our next event is going to be an e-commerce dedicated one. So you've got a really great e-commerce agency talking about how you can power up your e-commerce strategy, maximize your online sales, something I know that a large amount of you will already do and already be keen to get started on. So that'll probably be going live in the next, I don't know, day or so. So I will get an email out to everyone about that. But I just want to say thanks once again, and then thank you to Emily, and we will see you very soon.